Sure. So firstly, welcome and thank you for taking the time. So AAVSHKAAR Capital, just to give you a brief history, we've been around for over 20 years. We are one of the founding granddaddies of the impact investment space. Started life in India, but since then cover all of Asia and Africa now. I manage the African operations as the managing partner for Africa. AAVSHKAAR Capital's investment approach fundamentally is around ensuring that every investment that we invest into has a positive impact outcome. What do we mean by that is that it leads to generation of further employment, improvement of livelihoods through better paid jobs, training, skill sets, women in employment, and also ensuring that there is more sustainability within the businesses through very proactive environmental and social practices. Traditional VCs do some of that, but their fundamental outcome is measured around returns only, right? Whereas we look at both impact outcomes, ESG outcomes, and financial outcomes as a three-legged stool when we're looking at the success of an investment. Yeah, so in Africa, we've taken the view of investing using debt-like instruments where we've seen small and medium enterprises struggle to get banking facilities for a variety of reasons, from lack of collateral to complicated group structures or international sales. We've prioritized investment based on businesses that firstly have a high environmental and social footprint, meaning that they are either, if not managed well, can lead to significant negative environmental outcomes and or social outcomes. And we work with businesses where management teams are not only strong, but they are aligned to our objectives of positive outcomes around impact and ESG, right? Secondly, obviously the management teams for us need to demonstrate that they are competent and good or excel in the types of businesses that they're running, so that when our investment is there to help them grow, we ensure or hope to ensure that our returns come through with them as well. Excellent question. So in Asia, particularly in India, we've had an investment strategy very much around equity, venture capital equity. When we started in Africa for AAVSHKAAR Capital in 2019, we took a very detailed look at the African landscape and concluded that the ecosystem in Africa isn't conducive to equity at this point in time. Yet, small and medium enterprises, entrepreneurs are struggling to get capital. The concept of debt or debt-type products is very well understood in Africa. It has been around for over, decades. And we understood that offering capital through some sort of self-redeeming debt-type instruments was going to allow us to achieve our objective of helping these businesses to grow, finance their growth in a sustainable way, at the same time deliver the requirements that founders want, which is capital, right? So Africa is never short of opportunities, it's short of capital. So this is what we are able to provide. So our investment strategy has really changed in Africa at this point from being very equity-led in Asia to more debt-led, or what we call mezzanine-led in Africa. So in terms of the criteria, there are, I would say, three key steps that we look at, right? First is the quality of the management team. Second is whether or not we are aligned with them on environmental and sustainability goals. Are we also aligned with them on the impact outcomes that their business can deliver? And then finally, we also look at the financial outcomes that potential investee or investment could have. right? That process for us, because of the types of products we do, is almost providing debt with some sort of an equity quality underwriting in when we are investing in businesses. And that detailed analysis helps us kind of consider whether or not a particular business is of value to us, or probably not. And sometimes the business may be good, but it may not be delivering our social or environmental outcomes, or it may not be delivering our impact outcomes, and therefore we would not go with them, even though the financial outcomes could have been tremendous, right? But we never do it the other way around, which is even if the social outcomes and social and impact outcomes are fantastic, but the financial outcomes are not, it's not a business that we would support either, because its sustainability would be questionable. So we have a very capable team in a variety of sectors, right, and functions. Firstly, our team here in Kenya with Nicole, Nelson, Darren, we help a lot of these SMEs around the business planning before we even invest, which would basically mean developing a 5-year plan, strategy with the business owners to understand if they had the capital, how far and what could be achieved if all is equal. Very few VCs or investors do that because they are expecting ready plans from their potential investee companies. Secondly, we support all of these businesses with a significant amount of technical assistance facilities, whereby we will support professionals to help them bring about improvements in environmental and social practices through an enhanced environment and social management system, an EMS system, and or helping them recruit the right type of individuals. And we just don't back that up by physical or mental support, but also providing them with the capital to do that, which very few other investors would do. So we've made 3 investments in Kenya now. I'll tell you the first one is Hela EPZ, which is a business based out in Athi River EPZ zone. The business, when we invested, was hiring about 4,500 people. It rose to significantly more than that after investment, because they used the money to actually expand their facility in Kenya and use some of the capital to expand their facility in Egypt. We've also worked with them around carbon saving, around moving their energy usage from on the grid to off the grid, around solar usage, steam recycling, which has been very useful. And we're also working with them around the social aspects, because a large majority of their employees are women, and we're working with them to create baby crashes so that young women who have babies can actually bring their children to work so that they're taken care of while the mother works, which is a big issue for young couples in Kenya today. Our second investment is in a similar space called Balaji, which is also based out in the industrial area of Nairobi. They are textile makers. They do most of the jeans for companies like Levi and others. Extremely well run business, where we are currently helping them around management information system setups and ENS, or environmental and social governance setup, as we progress with them. Just of recent, we've commissioned, or will be in the process of commissioning, update on the ESG updates, where we will be working with specialists using our money to actually help these businesses, right? And then the final one is one of my favorites, Patrick's business up in Embu. It's called Privam Nuts. And this business makes macadamia, or processes macadamia nuts for exports. And we're looking forward to a very long relationship with him to increase the exports of these nuts by doubling his capacity to become one of the leading macadamia nut processors in Africa. Right? So there we're working with him around traceability, but also around the environmental and social management systems that he needs, given the number of farmers he interacts with and the number of workers that he has in his factories. So it's a beautiful question. It's around our impact measurement. So before we look at any investments, we firstly understand the model and we try and understand who is involved. What is the ecosystem that this business supports? A business creates employment, which in itself is a livelihood improvement on the people that are working in those businesses, right? But we also want to make sure that it is not just any pay, but a fair pay that is going to these individuals. Secondly, we encourage the right practices of employment with these individuals. And we start to also measure how much impact these individuals will have in the second layer of family members that are supported by them, right? Secondly, businesses in certain parts. So for example, one of the reasons we like Patrick's business, the Privam Nuts in Embu. Embu is not a city as yet. It's what we call a second or a third tier city in terms of size. By helping grow businesses outside key regions of Nairobi, Mombasa, Kisumu, is actually creating employment and livelihoods in the regions of Kenya where it's important to create more employment as well. So it's about spreading the wealth or the wealth creation capability across the country, as opposed to concentrating it only in singular countries, right? So when we are looking at any of our businesses, these are the considerations that play into our evaluation. We then take these assumptions and we map or monitor them over the course of our investment to ensure that what we believed that we were doing is what's actually coming to life. If not, we try and tweak it where we can. We like every part, right? So from a social perspective, we would love to go to northern Kenya, the northeast Kenya, where there's a lot more businesses. We've focused very much on the export-oriented businesses for now, because export businesses have a disproportionate positive impact on the population of the country, because we earn dollars, we're servicing a much larger market, we're creating employment at home for consumption that's happening outside the country. So there's a lot of positive outcomes that come by supporting export businesses, and that's what we are kind of focused on right now. So yes, regions is important, but trying to create export-oriented businesses is even more important for us. Absolutely. So Sow, Tend and Reap is a strategy that my founder had from day zero. It's very much a strategy that's being pursued more in India right now, where we have been known to seed extremely young businesses like Arohan, which we then nurture, referring to Tend. And those businesses have now grown quite substantially, with the likes of Arohan having a lending book of over $700-800 million today from nothing. And obviously, after we've grown it to a certain time, we will look to exit to create the value for our shareholders. And that's what we mean by Sow, Reap, Tend. But in another sense, it's almost kind of talking about seed to IPO, right? The start a business, take it all the way to a public listing is the ambition that we try and create with ourselves. Technology and innovation, whether you like it or not, is in every business that we're doing today, right? At the very basic level, we are ensuring or trying to encourage businesses to adopt with basic technology. Do we have the right ERP or MIS system implemented? If so, that allows the reporting to be done very well. Are we digitizing the entire value chain so that traceability becomes important for the end consumer? So in our mind, it's not about us investing in the technology itself, but more about consuming the technology that's available to make our businesses in Kenya or Africa much more lean, efficient, proactive, transparent to investors, because that's what will bring in the longer run more capital to the continent and help these businesses grow further, right? So we're much more about consuming technology as opposed to developing it, and it's much more about technology enabling as opposed to creating the technology itself. AI, I mean, it's become the new buzzword, right? Everything has an AI in it. We'll soon be told that, we will be running ourselves on AI. I think AI is going to be, I'm saying the obvious, it's going to be a game changer across many sectors. The clever or the differentiating factor is going to be how you use AI to improve yourself in the businesses that you're doing, right? So for example, in medical health, you can use AI for better quality diagnosis of patients' illnesses. You can use AI for better reading of X-rays or MRI reports. AI can be used in financial services to understand whether or not the business risks are high, medium, or low, by understanding how different data points are going to start interacting with it. So AI has a very broad usage. What we're very conscious of is not just AI for Africa, robotics, AI, and a variety of other technologies is coming on so fast that if we don't learn to use it, we can be left behind, right? And therefore, the traditional models that farming will keep people employed may not be true 15, 20 years from today when farming is done with robotics, right? Suddenly you don't need people. So how do we make sure as a country that we are moving from where we are today to the next level of understanding of usage of technology quickly and train our country to use that to make sure that we are, always pushing the limits of our knowledge base. Absolutely. Absolutely. It is one of the outcomes that impact will have to take into account, because if we do not, AI has the ability to be very disruptive on employment, on livelihoods, not always negatively, I mean in both directions. So yes, we always talk about the positive aspects, but we need to understand what are the negative aspects and how do we kind of make that portion of the population ready so that they are able to, have a positive livelihood going forward. So in Africa, we are very ambitious. We have a variety of plans. Firstly, we want to scale up our credit proposition or the debt proposition that we are offering to SMEs, not just in Kenya, but across Africa. We have aspirations to eventually move into certain equity positions as well, in terms of creating what we've done in India. Similarly here, we see a lot of opportunities in financial services, technology usage, etc. So we're very bullish on what Africa can offer. I think as I started off by saying, I don't think there is a lack of opportunity in Africa. I think it's been about the lack of capital and the ability for entrepreneurs to understand how capital can help them to actually achieve their goals, right? So I think it's an education curve. We are also running Sankalp every year with our sister company IntelliCap to try and have different segments of businesses at different phases of the growth curve interact with one another so that we all kind of understand in which direction we are moving. And a lot of our investment opportunities in the future for AAVSHKAAR Capital are being, I guess, guided by the outcomes of those learnings. When Ashish is not at AAVSHKAAR Group, Ashish will be either walking somewhere in the bush or in a national park or in my gym.
Yeah.
One of the three.
Okay.
Very rarely do you find me on the beach. Parting shots would be, we would love to see more opportunities from Kenyan entrepreneurs who already have a established business, who are looking for growth capital, to please approach us. We are here to work with them, to partner with them. We are very focused on the export market, particularly the European Union and the United States and the UK. We would welcome the opportunity to interact with them. And if we can be of any help, please reach out.